Starting a business seems like there are a million different steps. And then on top of that, there are so many different options where if you're just a normal person, what does a sole prop mean? Sole proprietor? What does an LLC, C Corp, S Corp? I have no idea. So that's why we're going to ask Derek in this episode today, coming up next. Hey, Derek, I'm sure that new businesses are probably your most common clients, I would assume. So I'm super excited for this episode. How you doing today, by the way?
Good, thanks. How are you doing?
I'm good. This is a really interesting episode. We were going through the show notes and breaking down the numbers, and I think the listeners today will really get a good glimpse of how you can best structure your business, whether you are starting a business and are restructuring a business. How often does that happen?
I get the question a lot. A lot of people are doing side businesses or starting their own business. So it does come up a lot. Everyone will ask, thinking of starting up a business here, what do I need to do? What type of entity should I use? Not every day, but it does come up quite often.
Between real estate investing can be a side gig. It could be a
Sure.
sense of side income, but also having your own active business, whether you are making things that maybe for a farmer's market and or selling e-com products on Amazon. I'm
Yep.
sure the list obviously is endless. Where do people start?
The best thing to do is call your accountant first because there are some pitfalls and some definite advantages to different types of entities to use, as well as the overall income and deduction side of everything, and knowing what you can deduct and what is actual income to your business.
So there's different types of structures, right? And maybe to break it down, as an individual in the United States, we all have our social security number.
Yeah.
And then on the business side, there are identity numbers that are also tied to that as well. And there's different types of businesses or structures.
Anyone can set up a business and just be a sole proprietorship. That's just you using your social security number to start a business. On your tax return, you'd file a Schedule C. You are the business, so there's no real separation between yourself and the business. Pretty much the easiest one to set up, but also exposes you to the most liability. Since you are the business, if anything happens in that business, you're also the one responsible. If the business gets sued, you're the one getting sued. With that simplicity and ease comes some liability and some risk with that.
Is that how you normally see most people kind of as they start their business? Do they come in as a sole proprietor?
Yeah, most people will set up as a sole proprietor. It's getting easier to set up your own entity. So I see more people coming in with LLCs or corporations now than before. The sole proprietorship is probably the most common. And especially if it's something that you're doing on the side and you're not sure that you're going to continue, it's probably not worth the hassle of setting up a corporation or an entity if it's something where you're just trying out and seeing if it's going to work. You don't want to have to deal with the hassle of winding down and dissolving a business that you just created a short time ago. So a lot of people will just start a sole proprietorship, run that, see how it goes. If it's successful, if they find that it's a viable business, then convert that to a different type of entity.
Say I'm now selling a whole bunch of cookies at the farmer's market and it is selling out like crazy. Do I actually need to file something separately as a sole proprietor, or what would I have to do?
As a sole proprietor for the business, no. So it's a Schedule C on your individual income tax return. So nothing during the year. You will on your year-end income tax return. That's what's called the Schedule C sole proprietor form, where you report your income and deductions. During the year, no. You have some other potential sales tax and things like that, issues like that. But for income tax purposes, nothing additional until you file that first return. If there's some significant income there, you may have some estimated tax filing requirements going forward, but definitely something you need to plan with your accountant with.
Okay. And then obviously, if you want to talk to Derek, that's all linked down below. So let's move on to the next one. We went from sole proprietor, which you said is the easiest because it's kind of almost automatic, but it opens you up personally for any liabilities. So I would assume that the next one would be the LLC. So
Yes.
what does an LLC stand for, and how does that differ?
An LLC is a limited liability company. The limited liability it limits your liability, but it also has a limited liability protection. You can still be sued for something that you do to somebody personally, but the entity itself, if it gets sued for some reason, someone comes into your store and trips and falls, they can sue the business. But assuming that it's structured correctly and you're doing everything properly, they won't be able to get to your individual assets. So it provides you that layer of protection. Or say a partner that you have or another member in the LLC does something that harms somebody, that person can sue that person, but you're somewhat insulated from that with that limited liability company.
And when do you recommend people switch, say, from a sole proprietor to an LLC?
It's a pretty easy to set up an LLC and even to dissolve one. If you think that your company is going to be viable and something that you want to do on a long-term basis, it's a pretty easy switch. Do it pretty quickly. And a lot of times we'll set that up.
This is actually the two types that I get confused with a lot, and I'm
Sure.
sure kind of sound the same. You have an S corp and a C corp. What are each of those, and what are the differences?
Under corporate law, they're the same thing. So they're both a corporation. If you go to the state of California to set up an S corp or a C corp, you're going to go through the same process. It's a corporation under the California's eyes. The S corporation status is just a tax status that you can take, which allows you to pass the income from the corporation down to the individual shareholders. Like an LLC or a partnership, the corporation itself does not pay taxes. The individual shareholders will pay the taxes. So you just break it up by, say you had two partners or two shareholders in an S corporation, you'd split that 50-50 or however you agreed to upon the articles. And you'd split that up and each shareholder would pay their share of the taxes on their share of the income. A C corporation is its own separate entity. So it pays its own taxes. They both file their own tax return, but the C corporation will pay taxes on its net income. So it's separate. And the only way to get money out of that would be to pay yourself a salary or to pay yourself a dividend.
That's interesting. So you're breaking down how taxes are different between each of them. Maybe how about just some examples of maybe which businesses should use different types of entity structures? So if I was just starting making cookies at my farmer's market, you'd probably say just starting what two types?
If you're just starting and you're not sure that you're going to stay in business, I would say, either sole proprietorship or an LLC. They're the easiest to set up. The LLC will provide you with some liability protection, but not necessarily any tax benefits. It's going to get taxed very similar to a sole proprietorship. So if you don't need those liability protections, then a sole proprietorship might be your best bet. And again, once you hit a point where you realize this is going to be an ongoing business, then you can look at converting to an S corporation potentially.
So just because you chose one in the beginning doesn't mean that you are stuck in that one forever. You can always kind of upgrade.
Yes. The tax treatment begins at the date that you decide to change to that different entity structure.
How about for a real estate investor? Say you bought a couple long-term rental properties. Let's just throw out Columbus, Ohio, because that's a fun market that I'm in.
Sure.
What entity structure should I be thinking about?
In general, an LLC is probably going to be your best option. Again, one size doesn't always fit all, but in general, an LLC would probably be your best option. An S corporation doesn't work very well with real estate holdings because, especially when you have real estate that has a mortgage attached to it, an LLC, which is taxed like a partnership, when you have a debt, that debt actually adds to your basis. And so your basis in the partnership goes up by however your portion of the debt that you assume. So if you're a 50-50 owner, then half of that mortgage is part of your basis. And so when you're taking distributions out, that allows you to take more out without potentially creating any income event versus, let's say you put in a $500,000 property into an S corporation and it has a $400,000 loan against it. That loan doesn't increase your basis. It actually decreases your basis because you only have $100,000 of equity in that business. So you're really only contributing $100,000 of basis into this property, even though the value of this property that's going in is $500,000. If you try to draw any money out, if you go beyond that $100,000 of basis, that becomes taxable income.
Gotcha. So the net of the story is, if you're starting a business and buying rental properties, you should definitely consult a CPA.
One other big pitfall with the S corporation too, I don't know if you've heard the whole idea of buying property and then when you die with that property, it gets stepped up in value, right? The basis gets stepped up and so that you can turn around and sell it without any capital gains. Well, if it's within an S corporation and you die, that value does not get stepped up. So you lose that also. So that's another thing to consider if you're thinking of putting property into an S corporation.
You mean that it automatically goes up in value?
Yeah, if you're holding it in your own name or in an LLC or partnership, then it's still considered your asset. That'll stepped up in basis when you ultimately pass away, any property that you're holding at the time, versus within the S corp, it does not.
Gotcha. We talked a little bit about tax treatments, but if we were to summarize it real quick, so a sole proprietor, how is that taxed?
So it goes on your individual income tax return, and the net income just gets added to your total income. So if you have other wages or investment income, that just all gets added up. And then you apply your tax rate to that. But the other thing is with sole proprietorship income, it is subject to self-employment tax, which is Social Security and Medicare tax. If you look at your paycheck, they're going to take out Social Security and Medicare, which Social Security is 6.2%, and Medicare is 1.45%. On top of that, the company matches that. So really the total Social Security is 12.4%. The Medicare is 2.9%. So for a total of 15.3%. You only see half of that because the company's matching it. When you're a sole proprietor, you're your employer. So you have to pay both halves. So you pay that full 15.3% of self-employment tax, which does go towards your Medicare and Social Security, but you pay that full amount. So on $100,000 of income, you're paying an extra 15.3% on top of your regular income taxes.
Does that also apply for an LLC too?
Yes, it does.
So if I was a small business, not a real estate investor, because obviously that has
Mhm.
its own benefits on that side,
Yes.
but if you were making an e-com store, let's just say something a little bigger than cookies, unless I guess you're Crumble.
Sure. Yeah.
But if you're making an Amazon store and you have a sole proprietor or an LLC, so let's run everyone through the numbers. Let's share the screen here. So running through the difference between an LLC and potentially what you think could be an interesting tax strategy
Yeah.
if you were an S corp instead. Derek, can you run us through what if you were an LLC? Like, what do these numbers here mean?
Sure. So what we just talked about, say you have $100,000 of net income from your LLC or from your business. Within an LLC, that's going to get taxed at your ordinary income tax rate. Let's just assume 30%, which would be $30,000 of taxes. And then state of California, assume 9.3%. So right there, you have $39,000 of federal and state income taxes. But now, like I mentioned before, on top of that, now you have this 15.3% self-employment tax. So another $15,300 gets added to your regular income tax. Out of that $100,000, you're walking away with just a little over $45,000. You're paying 55% in taxes on that $100,000.
That's crazy. Net income after expenses. That means my Amazon store probably sold more than $100,000 because I have cost of goods sold,
Yes.
all that good stuff. So what is left in the bank afterwards before taxes is $100,000. You're saying after all of this fun tax
Fun.
additions here, I am now giving away more than half of that.
In this theoretical example, yes.
That makes starting my Amazon store a little more less exciting. But there is a way to mitigate some of this, which now if I'm ever thinking about starting an Amazon store, I will definitely go with Derek's way here. So the S corp example, let's
Yeah.
break this down. Why is this different and why is there an extra column that's on this side here on the right?
An S corporation is not subject to self-employment tax. An S corporation, the income flows through to the shareholders. So if you're a single member or single shareholder S corp, have that same $100,000 of income. But if it's S corporation income, you'll have the same federal and state income taxes, but you don't have that self-employment tax. But there's a big but in there. An S corporation, you do have to pay yourself a reasonable salary. And so there's no definition of a reasonable salary. You just have to pay yourself as much as you would pay someone else to do the job, or someone else doing that job would reasonably expect to be paid. In this example, if you had $100,000 of net income, say you would have paid yourself, say 40,000 of that 100,000, which that 40,000 is a deduction to the S corporation. So you have now the S corporation has $60,000 of net income, and then you have $40,000 of W-2 income. And so you still have the same $100,000 of total income. It's just split up now between the S corp and the W-2.
Why does that matter?
So the S corporation will still maintain that zero self-employment tax. So in that 60,000, you're not going to pay any self-employment tax. So that's just going to be your federal tax and your state tax. Now the wages, you are going to have that self-employment tax. You're going to have to pay the employer and the employee portion of the Social Security and Medicare. So in essence, it's not called self-employment tax, but in essence, you're paying that self-employment tax on that $40,000 of salary. But 15.3% on 40,000 is much less than 15.3% on 100,000. When you combine all of that together, you're paying much less in overall taxes. If you go down the line, that's 60,000. You pay that your 30% in federal tax, 9.3% in state tax, zero self-employment tax. So you get to keep more of that money. And then the salary, you have the same kind of calculation I did with the LLC, right? You have your regular tax, state tax, but you do have that self-employment tax. Again, it's not called self-employment tax. It's calculated a little differently, but you end up at the same number. Have the lower kind of take-home payoff of the salary itself. But when you combine those two together, you're going to walk away with a lot more than if you were just an LLC. So if you add those two numbers together, you're netting almost $10,000 more than you would under the LLC scenario.
Just by having the S corp. These are all things considered the same, meaning your net income is still the same.
Yes.
It's just how it's structured that's saving you basically 10 grand.
Yes.
That's crazy. So if that's not worth a call to Derek, then I don't know what is. But on my future Amazon e-com store, Derek, you can best believe that I will definitely be doing this side.
Let's do it.
Because $10,000 just by filing incorrectly or just not having the right business entity makes 0 sense. That's crazy, right? Everything here is the same. It's just how this is classified, this line
Yeah.
that changes everything.
I mean, there is some more administrative work within this corporation, but for that amount of tax savings, if you scale that to $500,000, you're saving $50,000 a year of taxes. It's just a pretty powerful tool.
So if anyone got anything from this 15, 20-minute podcast, is hopefully business entity matters. And this is
Sure.
why you definitely need to consult your accountant as soon as possible if you're thinking about starting a business. And or if you don't have one, I think you know where to find one. Link them down below. Thinking about starting a new business, what are the 3 suggestions you would have new business owners do? Like what action should they be doing throughout the year, or maybe even starting it off? If we take one, making sure that you have the correct entity structure.
Yeah.
But what else should a new business owner consider?
Renting everything, definitely recommend getting some sort of software to track your income and expenses. Even if it's not a whole lot during the year, just getting into that habit, because everything is going to grow. And if you don't have a structure in place, if you grow and start having lots of transactions and don't have something in place, it just gets to be a hassle. QuickBooks is a great software, but I tell all my clients, just use whatever you feel most comfortable with. If you try QuickBooks and just hated it, look for something else. But whatever, don't force yourself to use something just because everyone says that it's great or whatever. Use something that you find easy and will actually enter everything into, because the most important part is that you have everything documented. Third point, talk to your core people, talk to your accountant, your attorney, make sure that you're set up correctly. The entity choice is great, but there's a lot of pitfalls you can make in setting up an S corporation or an LLC. So talk to your accountant, talk to your attorney. If you don't have one, ask friends, or I'm always available. Make sure that you get everything set up right. You don't want to get letters 2 years down the line and have to deal with that.
For some reason, starting a business seems so exciting. On social media makes it look so glamorous, but then you get into the nitty gritty of it. How do I actually even start it? What do I need to file? When do I need to file? Deadlines, taxes, and then it's all not common English. Unless you're classically trained, I guess you could say it's difficult.
And a lot of that stuff's not a lot of fun either, right? It's not, you don't see that stuff on the Instagram reels, right?
Yeah. Well, hopefully that if you're watching this, you found a little bit of value and it gave some clarity. If you're thinking about starting a business, then you should definitely consult an accountant, because as you can see here, even just selecting the wrong thing from the get-go could be a $10,000 swing. Derek, where can people find more about the services that you offer?
You can always check me out on Instagram. My email address, derek@fujikawacpa.com, or my website, fujikawacpa.com.
Sweet. You have any comments about this episode or about starting your business? You can make sure to leave them down below, or better yet, just book a call with Derek, so that way you can get more of your questions answered specifically. Derek, thanks so much for sharing all the information. I'm excited on getting the Amazon store started.
Yeah, like I said, let's do it.
Right on, guys. Well, I'll see you guys in the next one.
If you have any questions, send me a DM. If you want to book a call, check my link in bio.